please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
As far as our markets are concerned, just keep an eye out on a couple of things on the Nifty. The 10,600 call, remember, is witnessing a lot of writing, so that one should come up for you. The 10,600 call, when I last checked, had added close to around 16 lakh shares in open interest. So that is one mark that we have to keep an eye out on. Bears believe that maybe that is a mark that will go away or is not achievable in the very near future. However, at the lower end, the bulls are holding on to that 10,500 level. The 10,500 put has seen a further selling or further writing, which indicates that maybe the 10,500 mark is something that will hold. I'm talking about the 10,700 call as well as the 10,500 put. Both of them should come up for you. There you have it, the 10,500 put. But just keep an eye out on the global markets as well. Remember, we have decoupled ourselves from the other moves in the Asian markets. For instance, we saw a big move on Hang Seng, Shanghai, as well as the Nikkei. Nikkei gained on account of a weaker yen, and across the Asian indices, we saw some gains come by primarily on account of a bit of a thaw in the relations as far as US and China trade concerns, trade wars are concerned. Good opening for the European markets as well, the CAC as well as the FTSE. The only underperformer there is the Italian index. A lot of political uncertainty out there. So in an otherwise green European market, the Italian index is lower by about 1.5%.
And also what is striking, Mangalam, at this point is also that the Indian markets are underperforming the global markets. Sensex Nifty down 0.5%, Bank Nifty also in tow regarding that momentum. But what is really letting down the Indian markets clearly is the mid-cap universe. So keep an eye out for that one.
All right, big consumer news, something which will hurt all the car owners as well as car users. Petrol and diesel prices touch all-time highs. The market awaits the government action on excise cuts. On the back of this, we have Prashant Nair with a detailed analysis of the same.
You know, I've come back to this table and these numbers and how the numbers break up a couple of times over the last 2 years. So let's do this again, essentially because what we pay at the pump for petrol and diesel are at record highs. And this even as crude oil prices are nowhere near their record highs. I mean, we've touched $80, which is, I mean, a cyclical high, you can call it that, but nowhere near all-time high. So let's break this down. You look at the thing to focus on is row number 3 and 4. Excise, which is essentially what the government collects, central government collects, is 15 rupees 33 paise a litre. This used to be 3.5 rupees a litre when diesel prices in Delhi were 59 rupees a litre. I mean, this was in October of 2014. Back then, at 59 rupees a litre for diesel in Delhi, international oil prices used to be $100 a barrel. So look at the stark difference. You look at VAT. VAT varies. I mean, excise is steady across the country. VAT varies state by state. 16.75%. It used to be about 7% or so. So, I mean, even as international oil prices are $20 lesser than, I mean, the point that I've taken, which is October of 2014, what we pay at the pump is at an all-time high. Dealer commission has also gone up, but that, I mean, dealer costs are largely fixed. It doesn't really fluctuate with international oil prices. Let's look at petrol prices and how they are faring in Delhi. I mean, what we pay at the pump is at a record 77 odd rupees a litre. And again, the comparison is the last cyclical peak, which was about 76 rupees 10 paise a litre back in September of 2013. Again, you look at international oil prices, $80. It was $108 a barrel then. Excise, from 10 rupees, it's gone up to 20 rupees. You look at VAT, which is what the state collects, 12.7%. It's more than doubled to 27 odd percent, and dealer commission has also gone up as well. So, I mean, you know, and that's the reason why when you look at what the government is collecting, that has gone up. And that's the reason why the clamor that, well, you know, you raised excise as international oil prices were coming down. You did not pass the benefits on. But now as international oil prices are rising, why don't you pass it on? Can the government do it? I mean, if you ask economists across the board, the clear resounding answer is no. There is no fiscal headroom available. But even leave that aside, leave the macros aside, you look at the micros. For oil marketing companies themselves to be able to make marketing margins what they were making pre-Karnataka, I mean, elections when price hikes were stopped, you know, we need a price increase of between 4 and 5 rupees. Not a, I mean, we need an increase of 4 to 5 rupees. We are talking about a cut of whatever 2 rupees, whatever is being talked about, what the government can do. The last cut which the government effected was 2 rupees late in 2017. So I think, I mean, for all practical purposes, this is a pretty tough decision, and that's the reason why we're saying, I mean, it's between a rock and a hard place.
Oh yes, very, very tough decision there, and thanks Prashant for...
Still reeling with cuts of close to around 320 points on the mid-cap index. A couple of stocks, they're losing ground as we speak. ACC, PVR, both of them at the low point of the day. Along with that, we're seeing some profit taking in FMCG names as well. Britannia has moved to the low point of the day. But let's move on to the big story of the day. ULTRATECH Cement will acquire the cement business of Century Textiles through a share swap deal. Nisha, tell us more.
Oh yes, Manglam, and the stock reactions have also been quite sharp, especially on account of Century Textiles. So Century Textiles, and right now ULTRATECH Cement is in the green in an otherwise weak market with Century Textiles. That has recovered quite a bit from its lows of the day because it was a knee-jerk reaction, especially because the shareholders of Century Textiles really expected a higher valuation as far as the cement business is concerned. What's going to really happen is that for 8,600 crore rupees of enterprise valuation, ULTRATECH Cement is going to merge the cement business of Century Textiles with itself in 1:8 swap ratio. That means that if 8 Century Textiles shares held, you will get 1 share of ULTRATECH Cement. Now remember, 11.4 million tons of integrated cement and 2 million tons of the grinding facility. So the integrated cement valuation is coming in close to about $100 per ton, which looks like optically a lower valuation and which the markets have been really dumping down Century Textiles for. But what ULTRATECH clearly said that it's the valuation dynamics of the profitability and efficiency of that plant rather than the replacement value that was at play in terms of the valuation. Now remember, going forward, ULTRATECH has said that they are going to spend about 650 odd crore rupees in land acquisition for mines as well as for upgradation of some of the units. And also remember, their big high point and milestone will be to increase the EBITDA per ton and therefore the profitability and efficiency of the Century Textiles plant that they acquire. So they are looking at 200 rupees per ton EBITDA per ton expansion in the next 2 years. So that will be keenly watched out for. Of course, it's going to be EPS dilutive at this point. In 1 year, they could really break even and make it EPS creative as well as the efficiency really improves for Century Textiles. So at the moment, it's a large transaction. One very important thing to remember here is that it will require majority of the minority shareholders voting, because also the SEBI rule says that even though it's not a related party transaction, the promoter involvement of ULTRATECH could be seen in Century Textiles. So they are not leaving any stone unturned and they wanted a clear process. So therefore, this decision has been taken. So that's a big deal to watch out for. On to some earnings that are expected today, and FMCG major Colgate will be reporting its Q4 numbers, and Manglam has been poring over those numbers and the expectations. Tell us, Manglam.
Absolutely. So the street is expecting a good set for Colgate, primarily because the price is telling you that the stock is at a record high ahead of numbers. Last 7 days, the stock has gained almost 13-14%. So we'll keep an eye out on the revenue. 9.5% on the top line is what our poll suggests in terms of growth. EBITDA likely to grow higher than the revenue, 21%. Margins to improve by 250 basis points. The net profit likely to grow at around 23.5%. 176 crores is the number that our poll throws up. The key thing for Colgate, remember, results expected to be better than the past because the Colgate parent, they released their results and they said there was positive performance in India and Philippines. And the company, the products that did really well, that's the parent company said, were the Colgate Naturals as well as Swarna Ved Shakti business. They had a decline of 3% in the base volumes, so that will aid volume growth of 5% as well as margin expansion likely to be on account of GST offset. So 5% volume growth, 4.5 to 5% realization growth should lead to about 10% revenue growth, as well as the most important number for me for Colgate will be the market share, which is currently at a near 18-quarter low. Let's see, even with a growth in their performance, are they managing to arrest the decline in their market share and growing that or not? We'll keep an eye out on that. Just watch out for Cadila Health, though, however, from the mid-cap space. Now, the mid-cap index is down about 350 points. Cadila Health has suddenly slid about 5%. So we'll keep an eye out on individual stocks, and Strides too has extended its fall. But let's move on to some corporate action. Indostar Capital Finance, that one listed at a 5% premium today. We spoke with R. Sridhar, the Executive Vice Chairman and CEO of the company, who says that there is a strong intent to grow in the retail space.
Indostar has been focusing on corporate lending business, right, and recently we started diversifying into the retail business. So our intent is to take this company into the retail in a big way. We are carving a niche for ourselves in the used vehicle financing space, in the 2 or 3 vehicle owner. So there we feel that we can take a dominant position in the next few years.
All right, so that's the debut of Indostar Capital. Now, Tata Chemicals, that posted a steady set of earnings in the fourth quarter. And we spoke to R. Mukundan, who's the MD and CEO of the company. And he says that they would stick to 18% margins, but would like to test the 20% mark as well.
The sharpest impact has come from pulses, where we had a complete change of strategy to having a long supply chain to a very short supply chain, and I think that has played very positively in terms of margin, but has certainly impacted a bit of the revenue growth numbers. Market conditions have been very favorable to us, so I would credit part of that to the margin, but really I would say if you add the level of margin which we are earning from a business plus the investment we are putting in terms of building businesses, in terms of building brand, I would still stick by the 18% number, but now having tasted 20, we'll try to test 20.
All right, another stock which is taking a bit of a knock after reporting a stable set of earnings is Ashok Leyland, wherein higher other income boosted the profit, but the numbers were pretty much in line or slightly below estimates, if you must. We spoke with Vinod Dasari, the MD of the company, regarding the growth, and he says double-digit growth. He sees a double-digit growth going forward. Hear him out.
Markets are really showing no signs of resilience. In fact, have slipped further down at this point, showing quite a bit of weakness since the mid-cap space, which has slid further 1.8% down on the mid-cap index. Now, on to some important news of the day. And Prime Minister Narendra Modi has arrived in Russia for an informal meeting with the Russian President Vladimir Putin. And PM Modi's visit will focus on pressing global issues and ways of further boosting the already close bilateral ties between India and Russia. In the backdrop of US sanctions against some Russian companies, Prime Minister Modi will convey to President Putin that the defense relationship between the two will not be dictated by a third country.
And in some other important national news, 4 coaches of the Andhra Pradesh AC Superfast Express from Visakhapatnam to New Delhi caught fire at Birla Nagar near Gwalior. All passengers are reportedly safe as they were made to vacate the coaches as soon as the fire was reported. The cause of the fire is suspected to be a faulty air conditioner in the train.
Now, from election promise to flagship campaign, the Smart City project has been the cornerstone of the Modi government's vision for India. So as the government completes 4 years in power, CNBC TV 18's Kevin Lee takes a look at just how much progress has been made on this ambitious project. Take a look.
The plan to convert 100 Indian cities into smart cities was a major item on the BJP's election manifesto in the run-up to the 2014 Lok Sabha elections. However, it was only in January 2016 that India was introduced to the first 20 cities that would be the flag bearers of this project. Since then, 79 more cities have been added to the list, meaning India will one day have 99 smart cities. These 99 cities will receive 500 crore rupees of funding from the central government through the life cycles of their smart city projects and another 500 crore rupees from the governments of the states that they belong to. So one way to track progress is through the amount of funds that have been disbursed. In March this year, a parliamentary standing committee report estimated that less than 2% of the 10,000 crore rupees allocated to the smart cities project had been spent. Housing and Urban Affairs Minister Hardeep Singh Puri was quick to clarify that these numbers were not up to date. According to the minister, 936 projects worth 30,000 crore rupees have either been completed or initiated, while another 400 projects worth 20,000 crore rupees are in the tendering stage. The minister is also optimistic that by the end of 2018, significant progress will be evident.
The expenditure when I joined the ministry was 8,000 crores at that stage on the projects. Today it is already 400% higher. It is 30,000 crores. By June, it will be 40,000 crores. And by December, 80,000 crores. That is the reason I used to always say, you will see the visible manifestations between June and December.
This visual manifestation has already started in some cities. Pune, for example, has a command and control center set up, and about 1/3 of the individual projects have been completed. Similarly, Bhopal has been able to successfully implement pilot projects, including setting up cycle stands for green transport and integrating garbage collection with an Internet of Things interface. However, 1/3 of these future smart cities are yet to even appoint a consultant to guide various projects, and the centre has made it clear that it will not babysit municipal corporations.
If the urban local bodies do their job properly, they can raise the finances. It's when you don't do your job properly that you come to the center.
The first round of smart cities are expected to be fully ready by 2021, while the last round of cities have until 2023 to finish executing all the projects in their proposals. So progress is likely to be staggered according to the order in which these cities were awarded smart city status. But for the government, these timelines may be too staggered, especially if it wants to have something concrete to show when the BJP and its allies hit the campaign trail in 2019. In Mumbai, Kevin Lee.